Well, welcome. Good evening, everyone. Good to see you. Another edition of Moffat on
Dang
Money.
it.
I'm Clay,
I
joined by
think
the
they may have.
lovely and gracious E Train.
Hi. Did they miss that because it said you were live after you started talking? No, I think you're good. Okay. Sorry. Y'all, I'm having issues. And
Technology
Brentwood.
is not Ellen's friend tonight.
No, it's not. Unfortunately, I got a new pair of AirPods because, of course, I lost the case
You
and one
lost
of the
one
AirPods.
AirPod and the case.
Yeah, and I found it in the middle underneath my king size bed. And don't know how it got there. Don't even want to know why. Don't understand it. Anyway, but I got a new pair and they would not connect to my computer laptop right now. So I had to go get the other ones that I did recover.
And hopefully that's it for the night for technical difficulties. We are, around the country, around the world. Some of y'all maybe have noticed we're having a severe sunspot situation,
Yeah.
which is causing a lot of the northern lights far south. Here we're seeing it as far south as Alabama. We didn't get to see it last night because we had rain and clouds. Kind of hoping to
Mhm.
see some of it tonight.
Yeah, no,
But
Brentwood sent us a couple of pictures and it was pretty cool.
yeah.
All right, we've got
So
lots of little, I'm sorry,
I was just going
conversations
to say,
going
depending
on.
on any possible surges, that could cut off the broadcast.
Moffat, no more
Just
tech
saying.
difficulties tonight. No, 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 no. Okay,
Yeah, I
so
hope not, but it's possible.
possible. Anything's possible. Hi, Sky. Good to see you. And Jane, how are you doing? And yes, Jane did a fabulous job. Let's
You really
see.
did, Jane. Enjoyed
Yeah.
Tuesday night greatly. Thank you. Very much appreciated.
Hi, lovely people. Hello, Brentwood, our favorite
Hey,
mod.
Melissa, and hello just basically to everyone in the MOM family.
Yes. So, Sky, I'm a little concerned. My husband wanted lunch. I said, go outside and eat dandelions.
See,
But you
Jane,
follow it. Go
your
ahead.
your your night was extremely profitable and instructive.
Mm-hmm. Mm-hmm. But then Sky
Good for marriage
said,
counseling as well.
yeah, I didn't have mushrooms. If you watch Tuesday's broadcast, you know what that means. Anywho, Jane says, wait, I'm sorry. Yes, Brentwood did see him last night. Yeah, and sent us pictures. That was really cool. So rainy and cloudy here to see the lights. Yeah, I wish we would have. In Sky. Nice hair tonight, Clay.
Thank you, Sky. You are sweet. I haven't washed it this morning. That makes a difference.
Which brings me to my next question. So, you had graduation yesterday for honors and then today. How is that? How was it?
It's kind of fun. Kind of boring. We were fortunate in that today was cool because I'm wearing the academic robes and regalia.
Mm-hmm.
You've got on a robe, then you put on the hood, which is a heavy velvet lined
A
cape.
hood?
It's called a hood.
Okay.
Yeah, the hood is the thing with the different colors, and somebody who understands the colors can tell what school you graduated from and what your doctorate is in.
Gotcha.
So it's kind of an identifier. And then you've got the little fuzzy beret hats, we all were wearing. So you're pretty well insulated against the cold. Only problem is graduation's in the middle of May. And a lot of times down here, it's
It's
85,
hot.
90 degrees with humidity in an unair conditioned coliseum. So with, you
Wait,
know,
you don't have AC in the Coliseum?
10,000 people in there. I don't think it is. But it can get a little warm. And then, walking back across campus in the middle of the afternoon with the sun, it can get a little warm. But it was cool today. The good part is everybody's just so damn happy. It's a
That's a
big
good
event.
thing.
We have students up there talking about how they're the first one in their family from either side to graduate college,
That's sweet.
and their parents are there, and everybody is just so proud. Um, I'll have students like saw one today. I hadn't been in my class in a year. She came up, gave me a big hug, introduced me to her parents and all, and they,
Oh,
commented on, um, how she loved my class. And then saw another guy I hadn't seen in a semester or two, and met his parents. And he went, "This is the Auburn professor." Guy was wearing a Georgia shirt. So for y'all
yeah,
that
yeah,
y'all that don't follow American football, that's two big rivals, Auburn and Georgia. So kind of stood
yeah.
out. So
Auburn,
it's just
Au- Auburn, the basketball team who destroyed or broke Carolina.
one of my favorite moments, honestly.
Yeah, and I hate that about you that you love that so much.
I really do. Destroyed the program. Coach had to resign. Just
Yeah.
couldn't win, and it was great. So there's some really good parts to it that I enjoyed. Of course, you get all the long-winded speeches. We had an interesting guy today for the commencement speaker. He was the former CEO of Medtronic and had been, associated with J&J and Biomed, several huge medical engineering, biomedical firms. And
Oh,
so a kind of a fascinating guy, fascinating history. So that, it was good. Enjoyed it. Free food afterward, that's always a good thing. And
and I want to
so
bring
it's
up. Yeah, go ahead.
but it's 3 or 4 hours long, including walking to and fro and then the reception afterwards. So it's a lot of glad handing and talking and sitting and listening.
Yeah, I kind of sad I didn't get to see you in all the get up. That would have
Uh,
been a great picture to put up tonight. So,
yeah, when
boo.
Halloween comes around, I'll put it all on and put on a stethoscope, and then I can tell everybody I'm a doctor.
You already are a doctor, you goofball. I did want to say
Melissa,
something before we get to hang on, before we get to these chats, I do want to say something. I gotta take this off. So during I know Mother's Day is coming up tomorrow, and all of you mamas, even you, Melissa, with your baby dog, happy Mother's Day. This is some, I don't know if it's gonna be weird trying to do this. This is a pair of, can anybody see that pair of earrings? Um, that I got for Mother's Day actually from Clay in 2020. A friend of mine makes jewelry, obviously, and her husband was a 1099 contractor, um, building houses and such. And they weren't getting any subsidies, nothing from the government. They were just like, we're screwed. And so I had told Clay about this, and he was like, well, you know what? I'll buy you a pair of earrings from her for Mother's Day. With the season of what's going on with inflation and everything else, if you do know someone who makes something that you could give jewelry or whatever, um, to the moms in your life for Mother's Day, I highly recommend that as a suggestion because it's really going to help people where they are right now. That's all I'll say about that.
um, what's the girl's name that makes it?
Nicole, she's on
Nicole.
Instagram, Moonlit Swami.
Yeah, she does good work.
Mhm.
Ellen really loves them, so recommend them highly. If you need something or want something, recommend them highly.
Mhm.
Melissa, we spent the day at Lisa Vanderpump's World Dog Day event. We have one tired bean and a tireder human.
I bet.
Melissa, you find some dog event to go to every week. I'm impressed. I don't know what kind of research you do or how you come up with all these, or there's just that many dog events going on where you live. But your dog, yeah, it's like um, Sky Ricky said, Green Bean is a lucky pup. He really is. We all are kind of jealous of Green Bean. James, Ellen rocking the money cap. Moffat on money cap. So
Yeah, and the back says "Stupid should hurt," just in case you haven't seen that. And I don't have. Well, yeah, I do. Hang on. Oof. Clay said he only got one cap. It wasn't fair.
stupid should hurt. That's kind of the motto. I've got 50 rules for life, and stupid should hurt is actually the second rule. So,
What's the first rule?
um,
I forgot.
first rule is do as I say, exactly as I say, exactly when I say, exactly how I say it, and you will be okay.
Which is why we don't date.
Probably why
Yeah.
but I don't really
Why you
apply
been
that
single?
yeah. I really don't apply that to personal relationships. That's really more for the students.
Mm.
And I tell them what they need to know on the exam, tell them exactly what's going to be on the exam, cover it. I can't comprehend it I can explain it to them, but I can't comprehend it for them. So,
All right,
and
let's see.
it's funny at graduation seeing kids and I'm like, "How you passed my class?" So, it's a fun time. It's good seeing them.
Oh,
Jane, right
did I
before
get it?
graduation,
Okay.
got hurt and they had to wheel me across the stage.
Ouch. That's not
Yeah.
cool.
Ouch. Glad you made it.
Yeah. Better to be there than not to be there.
Sky Ricky, that's so nice, Clay. My husband says I am not his mother.
I mean, Clay is always one to help people who are in need. I'll give him that. And so when I was like, "Oh, she's hurting,"
I have my vices.
being nice.
Being nice.
And thank you, Melissa. I appreciate it. It was more of, I liked them and wanted to help her. And I was like, okay, it's your Mother's Day gift. There you go.
So it worked out good in both ways.
Mhm.
Was sitting here thinking, tonight, the main topic or the headline is really kind of how does an institutional or professional investor, fund manager, make decisions? What do they do differently than a beginning trader or investor? When I say trader, you can basically think investor. What's their thought process? How do they think? What do they think differently? What information do they value? What information do they use in shaping their decisions? Now, I freely admit this is a terribly complex question. And honestly, there's probably no way in hell I can do justice in its entirety. But the goal really tonight is to try to give you some generalized rules or ideas that I think most traders, most successful traders would agree with and use in some shape, manner, or form, kind of to help you think like a pro as you approach investing. The goal of the show is to try to help you make better decisions because we all know stupid should hurt and stupid usually does hurt. So trying to give you some ideas, principles to follow. Can't give you a specific formula, can't give you specific recommendations. One, because I'm no longer a registered investment advisor, so I can't give out specific advice. I can tell you what I would do in the situation. It's usually what I try to do, give you some insight as to how I make decisions.
Let me ask you this real quickly.
Sure.
So if there was a situation where it was like, if you were my daughter, this is what I would tell you. Not financial advice, but this is what I would do. Is that fair?
Yeah.
Okay.
I can give generic advice. I can't make specific investment recommendations.
Brentwood, thank you.
That is sweet. Thank you, Brentwood.
Now I got to
Really
figure out
do
who got them.
do appreciate it. We know it wasn't Carson.
Damn it. No, it's never Carson.
Yeah, and if you haven't watched the show, Carson is a regular, and it's kind of become a running joke. People will gift memberships, or Ellen will gift memberships, and trying to get Carson a membership. And it's kind of become a running joke because he will never get one. All sorts of strange, unknown, random people may get one, but Carson doesn't. Yeah.
And he
He's up
loves
in
it.
Canada, and we just
Yeah.
figure that YouTube doesn't like Canada or something. We don't know.
No,
Can't
Sky
figure it out.
Ricky gets them. She's in Canada. So I don't understand what
That's
the
right.
problem with Carson is.
Yeah.
Yeah. He gets so mad at me because it's random. There's like, you can't assign them to anyone. And he just gives me crap every time I give myself a membership, even though I don't even know that I'm on the list. But said, let me just say, Peter Francis, welcome. Selena, welcome. Meet Williams, welcome. Teresa Kay, welcome. And Janine, welcome. And thank you, Brentwood.
Thank you, Brentwood.
Oh, Scott doesn't get them. Oh, that's right. It was Carson who said he usually gets them, and not you. I apologize.
Wait, Carson said he usually gets them?
From the US. And Sky never gets them.
Oh.
I got that
Oh.
mixed up.
So Sky
No.
didn't get a gifted membership once. Okay.
Hey, Cheerful.
Hey, Cheerful, how are you doing tonight?
Carson's day will come. I believe Carson's day will come. We'll see.
Carson,
We keep
we're all
trying.
rooting for you, man. We're all rooting for you.
Where is he, by the way? He should be here.
Probably out banging on his car.
True.
Good luck with that, by the way. I think he's replacing a valve cover gasket. And he may even, maybe give him a little encouragement. He was talking about starting up a YouTube channel on repairing old cars, which is apparently what he loves to do.
Mhm.
So, that would be an interesting channel. All right, back to
Yes.
trading and investing.
Sorry about that.
No, that's all right. For those of you also new, we will ramble. It just is inevitable.
Brentwood, I would too. Just to
Carson
get
is
him
known
completely.
to derail the chat, so he's kind of legendary in that regard.
Yes, he loves to get us off topic, and then he just giggles about it later.
Yeah, if him and Ellen are a dangerous combo together.
Yep.
YouTube has good information out there. Sometimes it's a little difficult finding it, but there's a lot of information available, almost too much. All right. Trading, investing. If you had a daughter or child that, or someone that you wanted to start investing, first thing you have to encourage them is they have to have a mindset that will invest. And they have to understand and accept that bad comes along with the good. Now, most people tend to try to think about what method they will use to make decisions. Will they use some form of a technical analysis, looking at charts and price movement to decide when to buy, when to sell? Will they use some sort of cash flow analysis? Will they, subscribe to some service? Whatever. They have some method or basis that they use for making trading decisions. Well, the goal tonight is to try to give you a little bit better insight as to what the pros do. But to start it all off, you have to have the mindset to invest. Some people suffer what my mom used to call paralysis of analysis. They're constantly thinking things, trying to make decisions, but they can never make the decision. I'll give you an example. This past spring, I taught an intro investments course, and I set up a trading simulator where the kids were given $100,000 and given the chance to invest in any stock or secure, bond that they wanted to, just for play. And probably about a third of them either didn't invest at all or only invested a few $1,000s. It's like they never could find the time to start investing, or they were scared to make a decision, or they were trying to figure out which one, what they wanted to do. And that's not uncommon. I've seen that in a lot of people. They're scared to begin. It's such a wild, big, crazy world, the investing world, that they feel like they don't know enough. They don't know. They're so uncertain or lack confidence in what they want to do. And so they don't do anything. And that is probably the worst decision you can make.
I'm going to do a poll, or ask
Sure.
Brentwood too. On investing, do you, or yes or no, do you? And if you don't, are you terrified to do it? Do you not have money to play around? You're probably better at figuring this out than what
Yeah,
to
just
ask.
make it 4 or 5 questions. Do you invest? Yes, regularly.
It's a poll, so
Occasionally.
it's got to be one question with lots of answers.
Yeah,
Okay.
that's what I'm doing. Here's the answers. Yes, regularly. No, occasionally. 2 other choices could be I want to, but I'm scared of losing money, or I want to, but I don't know enough, and then I don't want to invest.
You're going to repeat that one more time for me and probably Brentwood. Yes,
Okay.
regularly. No.
Occasionally. Um,
I'm
then
typing it out.
other choices would be I want to invest, but I'm scared to. I want to invest, but I don't know enough. We'll go with that.
Okay, I got it.
Okay. So, the mindset, you've got to have the mindset. And that mindset, just begins with don't be too hard on yourself. Accept that you can't be right all the time. Nobody is. The pros make bad decisions. I have made some horrible decisions. Okay. I kid you not. You have to accept the risk in order to earn the return. It's that simple. Free. Any good trade is going to be a hard trade. But the key is understanding it's not whether you're right or wrong that's important. It's understanding that how much you make when you're right versus how much you lose when you're wrong. That's important. And we'll talk about that. We'll elaborate on that. One big key is that when you make an investment, you always want to protect your downside. You've heard me say that often. Protect your downside. Comment, but from Mark. I thought recently that a high yield annuity might possibly be used as a long-term cost averaging tool. It can, and you can use mutual funds in stocks or bonds, and the long-term cost averaging is one of those methods that I was alluding to earlier. And long-term cost averaging is just simply where you put in a fixed amount of money, $100 a month, $1,000 a month, into the same investment. So when the price rises, you buy fewer shares. When the price drops, you buy more shares. And the effect of this over time is to generally or oftentimes lower your cost. So it's a good investment strategy, but you don't have to just use a high yield annuity. You can use most any type of investment with it. Um, Mindset. So many people are eaten up with indecision. I understand. I understand the fear, the hatred of losing money. I'm very competitive. When I screw up an investment, it makes me mad. But I understand that risk. I understand that's going to happen, and I put it out of my mind and I go on and take care of business. If you can't handle some losses, you need to stay out of the market, honestly. Because too many people will form an emotional attachment to their money. My mom, bless her heart. I love my mom. I had a great mom. I respect the hell out of my mom. But when no buts, I respect the hell out of my mom. But she inherited, damn it, can't get rid of that word. She inherited some money from my grandfather. It was Exxon stock. He worked with Exxon for years, and so he left her some Exxon stock, and he told her,
Is
"Don't ever sell this stock. It will take care of you." And so she would never sell that stock. And Exxon stock pays about a 1.8 or 2% dividend per year, and it hovered around $80. Occasionally it'll go up higher, occasionally it'll go down lower. Every once in a rare while, it'll split. So you're looking at about a 3 or 4% yield per year. Well, this is during the 80s and the 90s when a blind pig in a poke could have easily done 12 or 15% a year in the market, the greatest bull market in our history. And I've shared with many of you the story of the little old redheaded lady. Do y'all remember that?
I know I do. I don't know if y'all remember it. If y'all want to hear it again, let us know.
And if you remember the principle of the little old redheaded lady, one is to help you get over the fear of investing. And two, the goal in investing to me is not to make perfect decisions because you never will. The goal is to try to improve your return by 2 or 3%, 2 or 3% a year. Over time, that will make a huge difference to the value of your portfolio. And so, since cheerful love stories, I will tell you the story of the little old redheaded lady again. I was in my office and got a call from a priest. Didn't know the priest, never met him that I know of, but he said he heard that I do some pro bono work and said he had a little old lady, sweet lady. He didn't call her little old lady. I always call her little old lady. He had a sweet lady in his parish that was about to retire and coming into some money, didn't know what to do with it, and asked if maybe I could help her. And I said, I don't know what I can do, but I'll be glad to sit down and talk with her. So a couple days later, this little sweet little old lady came into the office, and she had just come from the beauty parlor and had her hair dyed kind of a strawberry red. And I don't know if y'all are familiar with having a perm, but back in the day, that's what women would do to their hair. And she had just had a perm, whatever the hell that is. All I knew is that it stunk. It fogged up the whole room. It literally making my eyes water.
The reason that happens is because they didn't or break down the sulfide bonds completely before they neutralized it, and so then it smells.
But she was so proud of it. So proud. And so, one of my secretaries told me she was in. I came out and introduced myself, greeted her, and waved her on in, and I was following behind her. Well, she was wearing this strawberry perfume. You ever get in an elevator with somebody and it it just makes your eyes water? And, as I was walking to the room, I was thinking, this is going to be a hella short meeting. And so we sat down and, I asked her to tell me her story, and she started talking. And I mean, it took all of, I don't know, a minute and a half, maybe 2 minutes. And I was in love with this woman. Just a dear, sweet, precious soul. And just ooze beautiful. 65 years old, about to retire. And she told me her story. She had married when she was 18. Her husband was in the military and he got sent off to the Korean War and he was killed. Well, back then, this was in, I don't know, 55, 54, 55, somewhere. The Department of Defense had a $10,000 death benefit. And nowadays we go $10,000, that's not much. But back in 55, that would buy three 3-bedroom, 1.5 bath houses, 1,000, 1,100 square foot house, which was kind of the typical standard home back then. It would buy 3 homes. And at the funeral, she was approached by a neighbor who, pulled her aside and said, Polly, I know, you're getting a check from the Defense Department. I know you young, you haven't done much with money. And so if you have, if you want some help or something, I'll be glad to help you. He was an insurance agent. And I'm not knocking insurance agents. Just saying.
I hope not.
No. There's some good ones out there. There's some crooked ones out there.
Awful ones, yeah.
So, like any other profession. So he was a neighbor and she trusted him and they met and he said, Polly, I know you're young, but you are conservative. You don't want to take risk with your money. I've got this investment that will guarantee that your principal. It's a completely safe investment and it will pay you 1.25% per year for 30 years. 1.25% for 30 years. Well, she didn't know any better and she liked the sound of it being safe. So she put her $10,000 in his investment. It was an annuity. 30 years later, she's retiring. She worked as a secretary at this law firm, father-son law firm, little old law firm. And she literally worked a typewriter. I'm sitting here doing the typewriter thing. They didn't have a retirement plan. So what she had to retire off of after 30 years was her Social Security check of $232 a month, plus this money that was coming due from the annuity.
And how much was that, Clay?
That came to about $14,600. $14,600. This was in 85.
So we're talking 30 some odd years later.
Yes. 10,000 had grown to 14,000 and change. She had 2 main loves in this life. She was a simple person, never remarried. She loved having her hair done. And she had a little poodle that she adored, just absolutely adored. I'm surprised she didn't bring it. Reminds me of Melissa with a pug, but it was a poodle. Pug, poodle, something about dogs with P.
By the way, you do have an email of green beans day to day.
Okay. I'll take a look at it. So I'm the son of a bitch that got to tell her after running the numbers that she couldn't, not only could she not afford her two greatest loves, she couldn't afford to live because out of that money, she couldn't pay her rent, food, and utilities, just the basics. Now, long story short, I worked with the priest and a couple of parishioners a couple of individuals in the parish and got her taken care of so that she could stay in her apartment. She could keep her poodle. She could have her hair done once a month. It was all taken care of. My point is that she should have never, ever, ever been in that position. Because if you look at that $10,000 over 30 years, and you can go to that website I've told you about, the financial calculator, just Google financial, time value of money, financial calculator, whatever, and it'll bring up this .gov site. And you can enter in the numbers. But during this time, the 60s, 80s, even the mid late 70s, 80s, the US went through two huge bull markets. And like I said earlier, a blind pig in a poke could have done 12, 15%. If she had invested it in a stock mutual fund over the 30 years and just done 12%, which would be poor, she would have had roughly around $600,000 in 1985 instead of 14,000.
And she would have been set.
She would have been set, good as gold. If she'd had an average return of 15%, she would have had, it's around $880,000. The numbers are a little fuzzy. It's been a few years. $880,000. If she had picked a really good mutual fund and done 18%, she'd have had about $2 million in 1985. So my point to you is that additional 2 or 3% per year makes a huge difference over time. From 12 to 15, from 600,000 to nearly 900,000. From 15 to 18, from 900,000 to 2 million. So when I talk about the goal being an additional 2 or 3% return, that's what I'm talking about. That will make a huge difference to you over time. Those, those few percent really, really add up over time. And it is a very doable, it is a very achievable goal.
I think
So
this
mindset.
is, I'm sorry.
Sorry. Go ahead.
We got a few comments, but I think it's calculator.net.
Yeah. It's not
Okay.
.net. It's a .gov site, I believe.
I haven't seen a .gov.
Okay, I have it in the investing video, which I need to redo.
Okay, well, let's go with some comments real quick,
Okay.
if you don't mind.
Hello?
10
grand in the 1950s was a huge amount of money to a lot of people. Yes, it was. And it still is not a pittance.
No, nothing to shake a stick at.
Imagine what it was worth 50 years ago. James Brown, I am a good life insurance and annuities agent. Ellen was too. Well, she didn't do life. She did health, but
I did life.
There are good people. I did
life, health, and annuities.
Okay. I worked with good ones when I was in the business. So I am not by any stretch of the imagination knocking everyone in the business any more than I am traders. There's some crooked traders out there. Bernie Madoff. Anywhere you go. Don't even get me started on elected officials. But yeah, there's good and bad in every field. 30 years, not quite doubling her money. That's what 1.25% will do for you. That's what a guarantee of principal will do for you. My example, the little old headed lady, is not only what a few additional percent per year will do for your return, it's also to me, a rather effective image of purchasing power risk, of inflation. In 1950, that money she was given would buy 3 houses. 30 years later, it would barely be a down payment on a house. Now, if she had $800,000-$900,000, that would have bought 3 houses or more in 1985.
Yep.
So, purchasing power risk, inflation. Most people don't consider inflation when, it's kind of a hot topic past couple of years.
Yeah, well, you got to think about it now. I mean, how many of you can afford the exact same things that you could afford, 5 years ago? I mean, things have gone up so much. And it's, to be honest, I mean, we're in more credit card debt as Americans than we have ever been in. We are reaching that max as a country. And that's really sad because it's going to come down to something.
Yeah, over the past 4 years, if you trust CPI, which I can't say I do, and we'll talk about that a little later, if your money hasn't appreciated by 20%, 25%, you've lost money. The reality
Yeah.
is probably closer to 30, 35, but I won't quibble over the details. You get the idea, I hope.
Let's see. Cheerful.
Her church people were good people. She was good people. And I'm just thankful there was a good solution. And she lived, I kind of stayed in touch with her, and she lived happily and contented, and had a good life. So she was a simple, unassuming, unpretentious, just beautiful spirit. Melissa, I can't hear picking a poke without
I
thinking of
know.
European Vacation.
I laughed when I saw that comment. I was like, yep.
I've never watched European Vacation. That's the
What?
Chevy Chase.
Yeah. You've watched
Yeah,
Christmas Vacation,
you
right?
got it. Barely.
Oh, geez. What am I
You
going to
gotta
do with you?
remember it. In the 80s and 90s, I was working.
You that is your excuse for everything. I don't want to hear it. All right. So this is the link, and Cheerful said that is the correct one.
Is it? Okay.
Yeah. And yeah, it's a sad
I
story.
thought it was a .gov site, but I'll stand
I've
corrected.
never, yeah.
Okay, I'll stand corrected. Such a sad story. It's kind of a happy one to me because things worked out for her. I'm just kind of mad at the solution that was proposed.
Yeah.
And that's one reason why I do what I do and why we have this channel, so that hopefully, because you will be constantly making decisions about your money and your future, and that you can do so a little bit better informed and make a little bit better decisions.
Absolutely.
Slow but steady rising is what you want. Yeah, and it all depends on your needs. There are times when I have put 100% of the portfolios I managed in a handful of stocks. And I don't know if any of you are familiar with a guy by the name of Stanley Druckenmiller. He's kind of a legend in the investing world. He's probably one of the greatest investors ever lived. The guy for 30 years has turned out 30% a year.
Wow.
Y'all familiar with George Soros, the hedge
Unfortunately,
fund manager?
yes.
Yeah. Druckenmiller worked for him for a while. And in one day alone, Druckenmiller made him $1 billion. In
Wow.
one day, he made Soros $1 billion.
That's a lot of moolah.
That was in 92. So think about that on an inflation adjusted terms. The guy's good. And he's good. And he's kind of like, I will call him one of my idols. I don't know if idol is really what I want to use, but let's just say I hold him in great respect. And I'll even talk about him and some of his ideas as we go through.
Brentwood will take the
Um,
10 grand right now. We got a few more. Sorry. I would too, Brentwood. I mean, free money.
Yeah, I'll be glad to send y'all, my mailing address if you want to cut a check. I also take Venmo and Cash App.
Not PayPal. Screw them.
James, I do health insurance too, but yes, good investment advice you are giving. Thank you. I appreciate the encouragement.
So what James is saying is on October 15th, he would like for you to contact him if you are about to be or on Medicare.
Yeah, there's a
Am
sign
I
up
wrong?
window there.
Yeah. I'm not sure what that was about. What, Clay?
No telling.
Oh, you haven't watched European Vacation. That's what it was.
Oh, yeah. Again, I was supporting the economy, being a working slave.
A taxpayer.
Melissa, I think we need to start a
Yes.
movie club so Clay can catch up on everything he's missed.
And a music club. He's like, I've never heard of those people or that song or what movie. I never went to the movies. I'm like, dude. Yes, Sky Ricky seconds that. Movie club sounds good. Big Ben Parliament. I know. You know. Yes. You never heard of that?
Or if you
Why?
know, you know. No.
Oh. You never heard Big Ben Parliament?
If you can hum a few words, I might recognize it.
No, this was European Vacation. They went around the circle so many times because they couldn't figure out how to get out of the traffic circle. Every time he went around, he was like, Big Ben Parliament. Anyway.
I knew there was a reason why I did not watch that movie.
I know, right? Oh, good Lord.
Y'all remember the weirdest little bits. It's funny.
All right. Continue on, but don't
All
forget
right.
about Green Bean's pictures in the end.
No.
That's what I'm here for.
I keep saying, throughout the past year, protect your downside. Because you will make bad decisions. You'll make bad investments. But you want to limit your downside risk. You can do this oftentimes when you place a order. If you're buying individual stocks or ETFs or mutual funds through a broker, you'll put in a buy order. But you often you can at that same time put in what's known as a stop order. And the stop order says if this stock I just bought drops 5 or 10%, you set the amount, it will automatically sell and stop my losses. The biggest, dumbest mistake I ever made was not putting in a stop order on some shorts that I did. I got my anatomy handed to me. It was while I was a PhD student, had to hurry, run off to class, neglected to put in the stop. So, thank you, GM. Thank you, Kurt Kokorian.
For screwing that up for you.
Yes, idiot. Did I tell y'all I get mad when I make a bad investment decision? I have never gotten over that one.
I am very aware. It pays free rent in your mind. I do know that.
Oh, it makes it incenses me. So we talked a little bit about not forming an emotional attachment to the price. I'm just going to go ahead and call it. If you form an emotional attachment to a stock price, such as that if the stock drops, you can't sell it till it gets back to that price, that is the height of stupidity. That is almost the height of stupidity. That's the second highest on the scale of the height of stupidity. You have what you have in money. So what it's worth today is what you have. The only decision confronting you every day is, what is the best place for my money? You had incomplete information. You interpreted it wrong. You made a bad decision. It happens. Don't compound a bad day by continuing to make a bad decision. Now, if you still believe in the company or the stock or the sector you're investing in, whatever it is, carry on, hang on to it. Good for you. But you're making a conscientious decision. It's not because you think this stock needs to get back to some sort of artificial price before you can sell it so you don't take a loss. You have already taken a loss. If there's a better place for your money now that you have new information, you need to sell it and move it. The only thing worse than forming an emotional attachment to a price is arrogance. Arrogance that your original decision was right and the market is stupid. Now, that concept may have a lot of truth to it, but the old adage is that the market can be stupider longer than you can be solvent. You can be right and lose everything. Arrogance is fatal to profits. And I'll just go ahead and tell you the story. GM, well-known automobile manufacturer. Well, in 2000, I've been tracking GM for a while. And noticed that it was in kind of a pattern. I guess this was in 2004 or 2005. And it was trading between $18 and $22. And I watched it. It'd go up to 22, back down to 18, up to 22, back down to 18, somewhere thereabouts. And I thought, this is a repetitive process. I can make some money here. So it was up near 88, it was up near 22. And I thought, well, I'll just short some. So I shorted 1,000 shares. A few weeks later, it was, I don't know, a month later, it was down to 18. Closed out the position. I made $4,000 on a $1,000 investment. Not bad. I watch it. It bounces back up near 22. I short it, 2,000 shares. Month later, however long, I don't remember the exact time, but a little while later, it's back down to 18. Well, boom, I hit that. I'm made $8,000. I'm thinking, well, this is cool. This is easy. Goes back up to 22. So I do it again. 5,000 shares. Boom. So I'm thinking, I've done this 3 or 4 times, and I'm thinking I'm a genius. I'm thinking I have found the pot of gold at the end of the rainbow. I'm thinking I have the secret to free money. Thinking I'm brilliant. So I've got class coming up, and so I just go ahead and throw out an order to short, I don't know, 10, 15,000 shares and go to class. Well, when I come back from class, and let me back up. Do y'all understand what shorting is? Shorting is when the stock is high and you go ahead and sell it. And then when the price drops, you buy the shares. You have borrowed those shares to sell. Price drops, you actually go out then and buy the shares to repay the loan. That's a short. And that's how you make money when markets fall. You can short shares. You can short assets in the markets. So I go off to class, come back, and my phone has just blown up. I have 15 calls from my stockbroker, which is never a good sign. So I fire up my computer, look on the news, and a hedge fund manager by the name of Kerkorian has announced he's going to buy General Motors. And when somebody announces they're taking over a huge company like that, the stock prices zoom. And so as the price increases above the $22 I shorted it at, I'm losing money. And it's up to $28. And I'm sitting here thinking that GM sucks. It's got horrible management. They are bleeding cash out the wazoo. They have huge unfunded liabilities they can't afford. They had promised more in retirement benefits and future health insurance than what they could afford. And they made a crappy product. It just was at the time. And I'm thinking, there's no way in hell. By my own analysis, I thought the stock should be somewhere around $6. And here it was up at 28. So I'm sitting there thinking, and I admit my ego gets a little bruised. And so I think, screw him, I'm right. So I double down. I double my order at the 28. Price goes up 29, 30. My phone's ringing again. I'm thinking, this just can't be, this can't last. I know I'm right. Short more. 31, 32, 33. More calls. Short more.
Sorry.
34, 35, 36. Welcome back.
My camera stopped working. I don't know. It was just black. I don't know what was going on. Sorry.
So at 36, I'm like, no mas. I can't do this anymore. So I close out everything. I am a humbled puppy. Goes up to 38, 39, and Kerkorian comes out and announces, hey, y'all, I'm just kidding. I don't want the company. So he starts selling all of his shares. Well, I short him on the way back down to recover some of what I lost. But this was in, I don't know, 2005, 2006. I probably lost 80 grand on that deal. Net. So I considered it tuition. The price for being arrogant. The price for being lazy. If I had put in that stop loss order, I would have lost a couple $1,000s and been done. But I was in it. My pride got involved. My arrogance started making the decisions. And I just simply kept hammering it till it just utterly hammered me. So when I talk about arrogance, I'm not necessarily casting stones. I'm sharing with you for my own education. All right. Stupid should hurt. That's when I developed that as rule number 2. All right. Another rule that professional traders will generally follow, successful ones will generally follow, is you fade the short-term trend in favor of the long-term trend. Fade the short-term trend. That means that basically that you never, 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 never chase a price. Sometimes people see something moving or jumping and they're so excited and they want to get in on it. And they'll think, it's at X dollars, so I'll put in an order for X dollars. Well, by the time their order's in, it's up to X plus something. And so they'll change their order to buy it, and they're chasing the price. Vast majority of the times, that's going to cause you to lose money. Short-term hot money always peaks. And near that peak is where most uninformed investors buy. Now, I don't know how many of you remember AMC a year or two ago, a couple of years ago, actually. And here's the little calendar down here. So around 21, so it was closer to 3 years ago. Here's AMC's price from 2015, and you can see it's on a relatively steady downward trend. Fewer people going to the theaters. Their theaters were getting old, dated, not all that cool. COVID hits, attendance just dies. So the stock gets down to somewhere around $12, around in here. And then there's a blurb on, is it Reddit? I'm not sure where it was, but it jumps up a little bit and then drops very quickly, which ought to tell you something. And then it, bumps up a little bit and momentum builds. People say, hey, let's drive this higher. And so over a few days' time, and you can see the volume, the number of shares trading down here. You can see the volume picks up and drives the price from $12 to near $400. And most people bought it in this range from $200 to $400. It's where most of the shares were purchased. Well, as you can tell, the share price dropped rapidly. Had a couple little peaks, but dropped. And right now it is down to about $3. I've still got, I had some students who were on Robinhood and bought it, 375. They now own it at $3 a share. That is chasing a short-term trend. That is chasing hot money. Vast majority of the time, you're going to lose, and you'll lose significantly. Now, let me just leave it at that. You'll lose significantly. That is where most uninformed investors buy. Now, if we look at it a little closer, do you want to say something, Ellen? I'm sorry.
Well, yeah, I was thinking, didn't GameStop do the same thing?
Yeah. Oh, it happens time and time again.
Yeah. And it was all done done with companies where there wasn't a major BlackRock or I'm sorry, Brentwood kind of caught me off guard because when I got knocked off, I said, thanks, Brentwood, WAP. And she corrected me and said, we are professionals for the chat. And I was like, thanks. I forget the rapper kind of ruined that. BlackRock, Vanguard, State Street, those companies like AMC and GameStop are not controlled by those larger companies. Correct?
No, generally the larger, investment houses don't buy firms that are dying, businesses that are dying, industries that are dying. That's really more your individual investors. And if you look at it, movie theaters, you saw, AMC's declining price over the prior 5 years. And people were, going to theaters less and less. That was a relatively constant trend. The price was just getting so high. So that was really almost all individuals, investors. James, don't chase hot money. Never chase hot money. It will usually, very rarely, work out to your benefit. More often than not, you'll lose, painfully lose. And here's a good example. You've got, the bump. You see the nice little spike, which again is where most people are going to buy. It drops and then starts going up. Well, a lot of people think, oh, cool, here's going to make another run. So they're jumping in. You see a brief increase in price and then boom, boom. And it reverts back to where it should be. Again, most uninformed investors are going to buy within 30, 40% of the high. And the higher it goes, the more excited people get about it. They lose their minds. They don't think this company isn't worth this value. They think I've got to buy this before it's too late. And that's why people are paying 50, 60, $400 for a stock that's really worth $3. So you never never chase hot money. You fade the short-term trend. When you see a stock like this spiking, the first thought that ought to come to your mind is watch it
Sell.
carefully for the peak and then short it. Because 9 times out of 10, they're going to crash. So that's what I mean when I say fade the short-term trend in favor of the long-term trend. What you want is you want to be better at identifying and seeing long-term trends, and then you want to invest to take advantage of that.
Cheerful.
Cheerful question on GameStop. All these newbies buying as it went up, not really realizing their purchases were running it up. Then people started selling, and gee, what a shock, they lost money. As E mentioned as I typed. You know, a lot of these will go up fast and they will come down fast. If you're not literally sitting in front of a computer watching it minute by minute, it'll drop before you even realize what happened.
And Clay, I can't remember what I know the GameStop, the purpose. There was a purpose to it, some sort of screw you to somebody.
Yeah, it was there hedge funds. People, had the idea that hedge fund managers were screwing them. And so they knew a lot of hedge funds were short this company because it was a crappy company. And so they thought they'd run the price up, force the hedge funds to remember how I got burned on my short as the price went up. So the hedge funds were getting burned on their short as the price went up. They were getting these margin calls.
Yeah, I just couldn't remember what
the price goes up ridiculously. And what are the hedge fund managers doing at the higher prices?
They're giving the money.
They're shorting the hell out of it.
Yeah.
And so they end up even making money on that short-term deal. They lost money up front, but they more than recovered it on the back end.
So you're saying it's stupid.
It's stupid. Yeah.
Okay.
Yeah, that's putting it politely.
I try.
Now I've alluded to Stanley Druckenmiller, a guy that I think is one of, if not the best in the business. He always has focused on macroeconomic content. Macroeconomic is the big economy. Microeconomic is the economy of individuals. So looking at the overall economy, the macro economy. And I know in prior shows, I've bored some of you and many others talking about the macro economy, trying to explain certain aspects of it or give certain data on it. But I do so, and I will continue to do so because it's important, because it matters. The idea of the concepts is simple, and what Druckenmiller believes, what I believe, is that profits emanate from companies in an economic environment. The better you understand the economic environment, the better you understand the opportunities and the challenges facing the company or companies or industry. The better you understand that company in that environment, the better you can understand its future, its potential for profits. So by understanding the macro environment, the overall economy, in September of 92, Druck made Soros $1 billion in a day. I would say that's a pretty damn profitable strategy. Running his own fund into the 2000s, again, like I say, he's averaged 30% a year for 30 years. In the 2000s, even with 9/11, even with the subprime crisis, he never had a losing year. That's impressive. He had some down quarters, but he never had a losing year. That's pretty damn impressive. Now, in 2000, if you're thinking, why am I listening to Moffat? Let me go get Howard Druckenmiller. Well, in 2010, he cut off all investing. He's just running his own money. He's got, I don't know, 15, $20 billion of his own. So all he does now is manage his own money. He doesn't take clients. He got tired of worrying about clients and their money. And if you got 15 or $20 billion, that's probably about the time you decide, I just don't need the headaches. Green Bean needs to start investing his allowance. Pug retirement is expensive. To live in the manner in which he's accustomed to, I can see that as being an enormous expense. So I'm thinking like Arab Sheik type level for a pug. He lives a good life, Melissa. You take damn good care of that dog.
Yes, he does. He lives a fabulous life. In fact, can we take a little short break and show the pictures?
Yeah, did you send it to
Moffat? No, I sent it to the school
work
email.
or school? Okay.
Work. School, work, whatever. Which
Same
work,
thing.
work, school.
All right, let me get it up here.
We'll get a little GB plug, and while you're doing that, I will. Where is it?
Show me the money!
Aha, there we go.
This now, Melissa, you're going to have to give us the entire clan here.
I think GB is up top, obviously.
I didn't even notice the up top.
That's GB, unless I'm just nuts, but I'm pretty sure that's
him. I was
him.
looking down here.
Oh no, GB's the star.
At these fine-looking gentlemen here. What's GB's email address? I will donate. Add me to the list. I'll donate as well.
All right, here we go.
In the car.
Yeah.
On the runner is go ahead.
Daisy, Cedric, and Rosie.
That's pretty epic.
I love that.
And that's part of the coolness of the MOM family. We share our kids. We are not bashful about sharing the kids.
And the next one, Green Bean and Frankie.
All right. I didn't see it. Let me save it here. It won't let me open it direct. I have to save it actually, then open it. I don't know why. Can't open it directly from the email.
Don't know. There.
You've got the star, Green Bean, and then you've got Frankie. Good picks. Thank you for sharing them with us, Melissa.
It is listen, everything Melissa does is a pug pack. Love Pug Circus. Check that out.
Yep, that's Melissa's website. So she has some great little things. She's gotten our dogs addicted and cat addicted to some of her treats. The cat's really obnoxious.
The cat, Mahoney, has just become ridiculous. Like, I can't. You sent those Trader Joe's treats and she's ruined forever. We'll never get her back to her self that didn't require everything now. She has become like the biggest whiny baby that we have, worse than the dogs.
And every time she starts, Ellen blames it on you, Melissa.
I do. I'm like, dagnabbit, Melissa. Really? But no, so I have to make a trip now to Trader Joe's every couple of weeks to get her a few more bags of treats.
Yeah, Trader Joe's is becoming a bigger part of our life. Clay, I love the green M in your background. Ellen needs one too, though she does have the M cap. Story behind the M. That's actually due to Ellen's credit as well. We took a welding class,
Mhm.
and in it we learned, we're using a
Plasma
plasma
cutting
cutter and welding. And so she had the idea of cutting, the logo is that green M. She had the idea of cutting out a piece of steel and shaping the M and backlighting it with the, green lights to kind of match the tint. And so she largely put that together. And I, personally, I gotta agree with you. It's pretty damn cool. So
I agree. 100% I agree.
all right.
That's funny. Okay, hang on. Treats for all I know, right? But like she cries and whines and just goes nuts if she doesn't get like 4 or 5 at a time. It's
It's
silly.
unmerciful. It
Yeah.
really is.
In a Barbie pink car. Yes, she's in a Barbie pink car. But you know what? GP's man enough. Power pink. And
Did you
Melissa's
just
laughing.
assume his gender?
Well, he did have a castration recently, so I'm not sure how he's feeling. Oh, Beatrice. Hi.
Hey,
Thank you.
Beatrice. Thank you very much. God
It's
bless
good to
you
see
too.
you here. Absolutely. I hope you are having a lovely evening. Thank you for joining us. Everyone thinks. Well, he walks the red carpet just like a supermodel, so I don't know what else to tell you.
I mean, he's basically treated like a diva, so that might be part of it.
No, I think it's just, he's comfortable in his manhood and he likes his diva side. He likes his Hollywood rants.
All right, macroeconomic trends. Stanley
Here we go.
Druckenmiller. What
Back to it.
what back to it. What does he follow? What do I follow? What do I recommend you pay attention to? I mean, there's the universe. I literally now my livelihood has largely always been information. So I spend a lot of time reading, gathering information, analyzing data, doing what? I know not everybody can. So that's one reason why during the show, I oftentimes will try to throw out some of the current data or things of significance. But some of the trends you want to or ought to follow that I would commend to you would be things like movements in interest rates, obviously inflation, indexes about global economic well-being, these factors that impact all asset classes, central bank policies, geopolitical events and movements. We'll even talk about that in a little bit, looking at Argentina, wondering if this is a new geopolitical trend. You want to monitor the position of successful investors, such as hedge funds and pension funds. Most of them will publish public data on trades they make or give interviews. Like Stanley Druckenmiller, anytime I see something pop up where he's giving an interview or talking, I will generally watch it. It's not that every time is something new or amazing, but it's never a waste of time. I don't advocate that you blindly mimic their actions, but gaining an understanding of their thoughts, their ideas, their sentiments offers valuable insights to you. I encourage everyone ultimately to nurture their curiosity. The markets are made up of individuals, people with emotions, fears, whimsy. You want to know why economists suck at predicting the markets? And I am by degree an economist. My specialization is in finance. We're a subset of economics. But the reason economists suck at predicting, economic growth over the next year, 2 years, even in the, relatively short term, much less 5 or 10 years out, is because we can't quantify, we can't put in a formula human fears, human emotions, whimsy. Humans have the ability to learn, to adapt and change their behavior. So what we do as economists, we look at past history and we see, well, this happened and this is how people reacted. And so we'll take that reaction and we will use it to project forward should that same economic event occur. Well, oftentimes that reaction is different because other circumstances have changed. People have learned, they've adapted their behavior. For example, after the subprime crisis, 2008, 2009, housing prices crashed, interest rates were down to historically low levels. All the econometric models said that houses should be in high demand. And so economists were predicting that housing sales would take off. They didn't. Why? Because people were scared to buy a house. Banks were still shuttering, people were being laid off. And if people think they're going to be laid off, they don't try to buy a new house, no matter how cheap the house is, no matter how low interest rates are. So time and time and time again, econometric models trying to predict the future of the economy fail. So I'm not asking or encouraging you to try to be a better predictor of what the economy is going to do. What I am encouraging is for you to try to study some of the trends, get familiar with some of the data, how it's calculated, so that you can better interpret what's going on overall in the world. The stock market actually sucks. People always say the stock market looks 6 months down the road. The stock market actually sucks at doing that. Most of the investors in the market are consumed about the here and now. They look at the last month's numbers, the last numbers released this week. They don't look at the change from this month's number to the month before, the month before, the month before. They don't really look at the trends. That's why Druckenmiller is such a successful investor, because he looks at the trends, and that gives him better insight as to what's coming down the road. But that's a rare gift. Most investors don't do that. And that's kind of one thing I try to encourage on this show. Also, I love the market because it's people. I love the market because it's infinitely complex. I love the market because it's not easy. I enjoy the challenge. But while I don't expect to be perfect in my prognostications, predictions, investments, whatever, I do expect that having a better understanding and better information helps me make better decisions. And so I should consistently be outperforming most other investors. And I'm pretty comfortable with my track record. The more you know, the more adept you become at making decisions. And studying the market, studying people is a lifelong educational opportunity. Enjoy that. So when I say nurture your curiosity, I'm not kidding. Be curious, inquire. The more you learn of understanding human nature and the way people make decisions, the better off you will be in a number of realms, not just investing. This knowledge breeds a wisdom of sorts. It creates or fosters a confidence born of experience and growing understanding. That's always a good thing. That's always a good thing. People are, particularly that are insecure or scared, the best way you can overcome that is not by continually telling yourself you're great, but by studying and gaining knowledge, gaining confidence in an area.
Clay, with that, I just lost it. With that being said, the poll.
Yes.
Okay, I got to. Lord have mercy. Now I can't find it. It was. Wait. Okay, I don't have my glasses on. I'm sorry. I want to, but I
I've
don't
got it
know
here.
enough. Okay, you got it. Cool. Thank you.
Yeah. The question is, do you invest regularly? The 4 different choices are I want to, but I don't know enough, with 42% of the vote. Yes, 28% of the vote. No, I'm scared to at 14, occasionally at 14%. There were 7 votes. So if you haven't voted, if it's still open, go ahead and vote.
I closed it.
Oh, okay. But that gives us a little idea of kind of how to direct comments and, what's valuable to you in terms of the information we give on the show or try to give on this show. One thing I encourage everyone to do, and particularly in investing, is value contrary thought. It can help sharpen yours and reduce bias that you will have. Everyone is biased in some shape, manner, or form.
I think that's true with pretty much anything in life.
It is.
Always hear the consenting opinion or the opposite opinion of what you have, because if you don't, you'll never know the opposite side of the coin, or maybe something you should consider. I mean, I learn a lot from listening to people that don't agree with me.
Yeah, if you're afraid to listen to other contrary opinions, it's probably because you don't have a valid opinion yourself. You don't have confidence in it. You're scared to examine it or have it be examined, even in your own head. That's never a good thing.
No.
To me, the goal is I want to learn to view problems differently. I want to be able to think differently than others. I want to, and to me, this comes with understanding how people and the market responds to different events. I think of Rush Limbaugh. I don't know if most of y'all listen to him. If you haven't, you ought to try to dig up some of his old recordings and listen just to get a feel. It's not that you'll agree with the guy on anything or everything, but Rush Limbaugh had a gift. He had two main gifts. One, he was an entertainer. He could take just daily mundane stuff and make it a circus, make it entertaining. Secondly, and I think this was most valuable, he could see the same events, the same situation, the same people as everybody else, but come to a wholly different conclusion. That's a gift. Now, whether or not he was right or wrong, I'm not going to argue that. But being able to think and see things differently using a modestly rational process. Now, obviously, somebody who's very insane sees the world differently. I'm not advocating that. But
True.
this ability to consider different opinions, to think of things in a different way, to view things through a different paradigm can be valuable. If not always perfect. Nothing you do will always be perfect.
No.
I've followed macroeconomic trends for decades. And in 2009, for example, I learned a extremely valuable lesson. I had a
What's that?
relatively poor year performance-wise when the market did well. I was probably, I don't know, under the market.
Oof.
Yeah, it's not good. But all the economic news was bad, but the market still did well. I forget what it did that year. I don't know, 15% something. Anyway, and I figured out that the market was no longer paying attention to macroeconomic events. What it was doing was looking at the Federal Reserve, and the Federal Reserve had started a program called QE, quantitative easing, where they were injecting massive amounts of free money, giving it to the large banks. And the large banks weren't making loans. So their only other option with this free money was to invest it. And that's what was driving the market up, not the economy, not expectations of cash flow, not earnings, not confidence in the economy. It was just this huge supply of money being dumped into the market because it had nowhere else to go. And I surrendered. I said, okay, as long as the Fed is going to be throwing out free money, I'm going to invest like a crazy fool. And I did, and did well. So my attention really has been more on just observing the Fed. I still follow the macro events because it's fascinating to me. It's interesting. It gives me some additional insight. But the key, the Federal Reserve has been the 800-pound gorilla in the market for a decade. Now, the past few years, they've tried backing out of it. I don't know how much longer that's going to be the case.
They can't. They can't sustain what they've been doing.
They may not have a choice. Remember, there is an election coming up.
I know, but it's just going to end up being worse for,
In the long term.
yeah.
I
don't want to depress everyone. I'm just saying.
Yeah, I admit I've been kind of a bear for a little while, and I'm really, really tired of being a bear. But there are so many things out there that I see that just aren't good. And, the market can have a short-term trend that is opposite of my thoughts and opinions. That hasn't caused my thoughts and opinions to change.
Well, it's opposite of economic, what do you call it, policy or math, or like the math doesn't math with what's going on.
Yeah, keep in mind what I referred to earlier. The market has amnesia. It forgets even the recent past and rarely, if ever, focuses on trends. So the reality, when it occurs, oftentimes shocks the market and the market reacts violently. That's to your advantage. The market is simply hoping that the Fed will start free money again, because that was a guaranteed winner. You could buy any stock over the past 15 years and do extremely well. It was hard to make a bad investment.
Yep.
People love that. They can get addicted to that, and they have. And so when economic news comes out that's bad, the market goes up, which is counterintuitive unless you understand that they're expecting that invites the Fed to pump free money again.
And it's a false sense of security, in my opinion. Like if you start investing and you're like, I can't lose, pretty much, and it's not going to last. Does that make sense?
Yeah. It's a house of cards. It's fragile. There's no way to tell specifically how high is high or how long it will go on, but it is fragile. And looking at trends help me understand whether what the Fed is doing is really going to help things be better off in the future, or whether it's just compounding the issue. So I still study the trends, and Druckenmiller gives a good example of why he started following trends, and I always thought this was informative. He talks about, he says, how he learned from his former mentor, a guy by the name of Drellis. And Druckenmiller was a chemical analyst. Gotta love somebody with a background in chemistry.
Don't toot your own horn.
And so he was like, analyzing chemical companies, and he was going, why should you buy chemical companies? Now, typical Wall Street earnings, typical Wall Street thought is when earnings are great. You want to buy a company when earnings are great. And Drellis told Druck that you really don't want to buy when earnings are great, because what are they doing when their earnings are great? They go out and expand capacity, right? Well, 3 or 4 years later, after they and other competitors who have been doing great have expanded capacity, there's now overcapacity. And they're losing money. So what about when they're losing money? Well, when they lose money, they've stopped building capacity. So 3 or 4 years later, capacity will have shrunk and their profit margins will be way up. So you always have to imagine the world the way it's going to be in 18 to 24 months versus what it is now. And that's how Druck, approached investing for the rest of his life. And that's how I approach investing. If you buy something now because of what's going on now, you're buying into a fad at this moment. Whereas if you envision the future, you try to imagine how that will be reflected differently in security prices. Cheerful. Emotion, fear, whimsy. Why past performance is no guarantee of future prospects. Yeah, there is huge uncertainty in the market. And what you're really looking to do is to identify good firms in good industries. That bottom line is Druck's success and other successful investors. Well, how do they make that decision? Well, they're studying trends. They understand the climate, the economic climate, the geographic turmoil, the opportunity for new markets that companies have. Right now, a hot topic is AI. I think most everyone agrees AI will have a bright future. But you look at a company like Vita, it took off. It went from, I don't know where it started. It went from, was it 300 to 1,200 in a few months? Just absolutely blew up. And Druck owned some of it. Well, he sold it. Does that mean that he's not confident about their future? No. He just thinks that future will be years developing, and that huge rush, that huge surge was an overpricing. So he sold it. Well, the stock's down to 900 now. And he has said, I will probably own Invita on and off for the next decade. He is a long-term investor, but he's never afraid to take a great gain, because stocks don't ever, people are always like, well, it's quadrupled. It may go up more. And so they're afraid to sell it. Stocks never go up every year, all year. They will have
ebbs and flows.
Yeah.
All right, I got to get to this because I love this. Cheerful hat with M. It's pretty cool too. Hey, I have one. Yes, you do. You and 16 or 15 other people are the owners of a hat like this. And hopefully we're going to get the store up so everyone can purchase one. We've had so much fun giving them out to you guys, and we appreciate you wearing them with pride and support.
Yeah, we need to put together some of y'all have sent us your picture, and I believe we asked earlier if it's okay if we use those and put together kind of a montage of everybody with them on. So if you haven't sent it in, or if you sent it in and don't want your picture used, let us know.
We'll just blur out your face. I don't know
Yeah,
what we'll do.
to show that.
So,
All right. So, back to some, specifics on what you should follow, or, things that I look at. Again, looking at big picture trends. So, a common one with good information contained in it is PE, price to earnings ratio. You just can Google S&P 500 PE ratio, and you'll get some chart similar to this. This one goes back to the 1870s, 60s, whatever.
holy
And if
cow.
you look at this, you can ballpark an average, and you can say on average, up until the subprime crisis, the average was about 15. So the historical average is actually about 15 to 16. Well, right now it's at 27. So that means the price you pay $27 on average for a stock with $1 in earnings, price to earnings, when the historical average is 15. So what does that tell you? It tells you that people now are paying more for earnings than they have historically. That ought to signal a red flag. That ought to signal some caution. If we were at the depths of a recession, economy had been horrible, you would expect PE maybe to be higher because people were anticipating the recession ending and a future great economy. But when the economy is going well and you have these high PEs, they almost always come down, and they can come down rather quickly. That's the risk. So when you see higher PEs, what ought to come to your mind is higher risk. Um, given the current economic climate, current geopolitical climate, is it reasonable to expect earnings to soar for American companies over the next year? I have a hard time with that. Over the next 18 to 24 months, I have a really hard time with that. Um, you want to focus on sectors that impact the economy the most, like housing. Housing is the largest industry in the country. I mean, it impacts agriculture with lumber. It impacts steel making with durable goods. When you have a new house, you have to buy a stove, an oven, a hot water heater, washing machines, refrigerators. All of those are made from steel. Uh, Mining operations, copper, plastics, PVC, ceramics for the tile, granite for your countertops. Already talked about wood for cabinets, lumber, etc. Tar for asphalt roofs, tin for metal roofs. You could go down and just think about all the different things that are put in new houses and see all the different industries that are involved with it. You've got plumbers, you've got electricians, you've got carpenters, roofers, on down the line. So it is a hugely significant industry to the economy. So you want to track and see how housing is doing or will do. A big key to that is looking at building permits. Building permits are where a contractor is anticipating new construction, but he first has to go get a permit before he can start. So here on the left, you can see building permits year over year change. And you can see from, basically 2015 through 23, that there's a lot of vibration, but if you look at it over time, there's a clear downward trend. So you think, okay, downward trend. What has happened to housing under construction, year over year change? Well, you've seen housing construction decrease during this time period. They are, this is a signal. This is information you can use to judge the future. Now, you can't look at it from period to period, and that's what the market often does. It looks at one period and goes, oh, it's up here. That must be good. Oh, it's down here. That's not good. It's not the one period events that matter as much as the trends over time. Another, important factor, and I've talked about this repeatedly, is money supply, liquidity. Liquidity, you can think of liquidity as the ability to borrow. How much money is available to borrow? The more there is to borrow, the cheaper it is, the easier it is to borrow. The less there is, the more expensive it is to borrow. And again, you want to follow the trend. Is liquidity increasing or decreasing? Now,
Thank you, Carson. Hang on. We have a wild Carson sighting.
Proof of life. Welcome, Carson. Good to see you, man.
Thank you. I think a few of us are a little worried about you just because, you're usually hanging out with us. So thank you.
See, Carson, you are loved.
By a lot of us. Absolutely.
Well, when you find a place, I've got the dogs for you.
Stop it. Stop it. Those are my dogs. You're not getting rid of them. Yeah, he actually just sent a picture of a dog that he found today that he wanted to take home. So yeah, puppies are always good. They're good company.
They are good company sometimes.
Stop it.
Anyway, money supply. Now, this is the rate of change in money supply. This is not the absolute amount. So I tend to follow the rate of change more. And here you can see, in the COVID stimulus, and then the stimulus plans, even when this is declining, from 21 through the middle of, through 22, the numbers are still obscenely high. This is a 15% per year increase. So the rate of increase has decreased, but it's still a damn high increase. So you have to be careful when you're looking and interpreting the graphs. The pictures tell a story, but you've got to make sure you take a minute or two and understand that story it's trying to tell you. Now, this black line is zero. So here you have the money supply contracting. And you can see recently it started shrinking at a lower rate. Or do I want to say higher rate? It was shrinking at a rate of 5% per year. Now it's, 1 or 2%. So the Federal Reserve is kind of stopping the decrease in liquidity. Does that mean they're going to start pumping more money again here soon? I don't know. But remember, their balance sheet grew from, basically 800 million to $10 trillion here in the teens from 2010 through 2019. Huge increase. They bought tons of securities. Well, Powell had tried to reduce those amount of securities by letting them mature, and that's what you're seeing here. Well, let me explain this too. The Fed and securities. When the Fed buys securities like bonds on the market, just follow the direction of the cash flow. If a bank is selling a bond to the Treasury pays cash for it. So the bank now has more cash. So that increases the available money supply. If the Fed is selling bonds or letting them mature, then that takes money out of the economy. They they sell the bond to a bank, the bank has to pay cash. So if you follow the direction of cash, it will tell you whether or not the money supply is increasing or shrinking. And you can look at the Fed's balance sheet, the Federal Reserve's balance sheet on FRED, FRED. You just Google FRED, Federal Reserve balance sheet, and it'll be the first line to pop up on Google. FRED is a database maintained by the Federal Reserve of all these different economic statistics. And you'll see me throw up some of these charts and graphs often from FRED. So this is a chart of M2, the rate of change from month to month. This will give you some idea of maybe what is to happen or what is to come with liquidity. And liquidity is important in a vibrant economy, having liquidity. If liquidity is tightening, that oftentimes mean that could be a recession ahead. Any questions so far? Is this making sense? If you have questions, just let me know. Another thing you want to keep an eye on is the US debt. Hot topic for me, obviously. It's now up to about 35 trillion, which is up from 31 trillion last June. But what you want to keep an eye on really is entitlement spending. Social Security, Medicare, Medicaid. Those three expenses make up currently about 70% of the US budget. And it's rising as the population ages. Combine that with interest rates. Interest rates have increased, which causes the interest paid by the government to soar. The interest on the national debt is now a huge expense for the government, and it's growing rapidly. Honestly, the politicians say we can't cut entitlements, we won't cut them. But I'm telling you, that's a simple lie, an absolute lie. The longer they wait, the worse it will be when they do finally cut them, and they will cut them. They won't have a choice. Interest expense, for example, right now, interest expense is about 2% of GDP and about 6% of all government outlays. Well, the CBO, which normally understates things, has estimated that the interest expense will be 27% of all outlays by 2040. If those estimates are correct, entitlements and interest expenses alone will require 100% of all taxes by then. So everything you pay in taxes will go just to entitlements and interest expense. None of it will go for defense. None of it will go for any of the other services or operations, parks, any of that the government runs. None of it. 100%. That's severe. That just simply cannot be sustained. So there are basically a couple options. The government can raise all taxes by 40%, or it can cut spending by 30%. It has to do it immediately. The longer it waits, the worse it gets.
Sorry, y'all know I have like a hour and a half bladder, so I had to tinkle. I apologize.
The
And
dogs
Carson,
are white.
yes, a dog is in your future. Sir
I'll put a
liquidity, but what
postage
about,
stamp on one of their asses.
huh?
I'll put a
No,
postage
you're
stamp
not
on one of their
either.
asses and send
No,
it to
you're
them.
not. No, you're not. You can name him Fred. That's a good name for red bone. Aw,
Carson, let me introduce you to your new Fred.
that is my baby. You stop it, Moffat. You've been trying to give my dogs away.
That's because they like adventure. They would love Canada. Big, wide open spaces. They get to chase moose.
Moffat. Carson does
I
not
think it'd
like
be
little
cool for 'em.
dogs. There you go.
They grow on you, kind of like a wart, Carson.
I thought you were going to say fungus.
We
Maybe
don't
a
have much
mushroom,
to
Jane.
remember.
I don't know. Yeah, I know. I'm just saying.
So, the problem with any of that is that higher taxes reduce the amount of money for investment. It would hurt, for example, you as an individual, your ability to invest and save for your retirement. And this while Social Security is failing. So are you going to pay more taxes and receive even less in the future? Yes. What about borrowing more money? Keep spending, borrowing more money. Well, rising interest on the debt is consuming and will consume a huge portion of federal expenditures. It reduces the amount of capital for businesses to invest in because it raises the cost of money. The government is borrowing so much that there's competition for the amount of available capital to lend. Investors only have so much money. So if government is borrowing more and more, supply and demand is still a law. If the government is creating more demand for cash by borrowing so much itself, that raises the price, the cost. The third option is for the government just to print money, which generates inflation. And inflation is still a tax. It's a tax on the poor and the middle class. It will utterly, absolutely devastate them over time. So, those are some of the things you want to keep an eye on. This kind of stuff is, to me, the Hurricane Katrina in the economic ocean. The only question is, where and when does it land? This is going to happen to us all. It will impact us all. Whether you like it, whether you're thinking about it, whether you plan for it or not, it's coming. It will happen. So it's not going to be pretty, but I can't tell you exactly when. I can't tell you exactly how it will manifest. Does it start in commercial real estate? Whatever. Don't know.
All right, a couple things.
Okay.
And I'm curious. Brentwood, I used to too. I had mastiffs. They were great. Had all kinds of big dogs, but great
German
GSD.
Shepherds.
Oh, sorry. I didn't get the whole thing. And then Carson, of course. He doesn't want to admit that multiple would be a fungi. Little dogs.
They closely resemble fungus.
No, they do not. Third. 70s when we would sit in the gas lines. I sat in a gas line right after Florence for a long time trying to get gas. It was not fun. And then, yes, thank you. I'm not hard G. Okay. Aside from pugs, I do love Great Danes. I like Great Danes too.
Yeah, I'm kind of like Carson. I love big dogs, dogs I can get up and tackle in the morning or whatever. Bull mastiffs, Irish
Ah,
wolfhounds.
fungi. Okay, got it.
Y'all have a language of your own.
Okay, Jane, represent cats. Mr. Caroline thinks he's a dog, and I haven't told. Our cat thinks he is too. He goes on walks, or she, excuse me, she goes. Well, I haven't asked her what is like her preferred pronouns, but she walks around the block with us with the dogs, and everybody gets freaked out. Like, what? Like,
Yeah,
why does your cat follow you around the neighborhood? We're like, ah, she likes to walk with us.
they think that's
Anyway.
cool as hell.
They
It's
do.
a little unusual.
Okay, okay. Let me go back. He doesn't want to admit that multiple would be a fun guy. Okay, got it. I understand now. Clay, you got it? It's like, damn it. I know. I'm sorry.
I'm going to
When it
leave that with
takes-
y'all.
When it takes a whole bunch to get to the punchline, I do apologize. Anywho, continue on. Because the conversation's always fun. Oh, hang on. We had a pug friend who had his own murder of crows. He would follow him. Are you serious?
Now that beats having a cat follow you around.
Yeah, it does.
Crows are actually highly intelligent. I saw a video of a guy that trained a crow to pick up currency, like dollar bills or whatever. No,
like pickpocket or pick.
No, the crow. I don't know how the crow got it, but he would give the crow a treat, and so a couple times a day, the crow would just fly into his window and sit there with a bill in its mouth. It might be a 1, a 5, 10, whatever.
That's
and
crazy.
He'd give the crow a treat, and the crow would fly off and go hunt more bills. And I'm like, that's not a bad idea if you live in a city.
All right, Melissa and Brentwood and Carson, maybe Jane, don't know. Sky, let's get some and Cheerful. We need some crows. We need a murder. Not a murder, but some crows. Yeah, never mind.
Good news.
It's past my bedtime.
It's all right. Good. Anyway.
That was not my responsibility, Carson. Yes, same. I know. Carson, you're such a nerd. Anyway, continue on. I will shut up now.
Oh, you're fine. A couple other things. One, like this week, CPI is coming out. The more you know about how CPI is calculated, the stupider you'll think it is. The number is. Honestly, I'm not kidding you. For example, this week, I would not be surprised to see the CPI come in lower than what's expected. It's been above estimates for like the past 5 or 6 months. But there are a couple things. One, there's elections coming up. And I've alluded to the fact that the BLS has published some really BS numbers. Are they doing it for the president? I can't prove that. But the numbers are highly suspicious. But there's a couple other things. One, last month, President Biden predicted that the Fed will cut rates this year, despite the current high inflation rates. And then the chairman of the Fed was talking about rates the other day, about inflation the other day, and he was alluding to the fact that market rents, how much rent is, that a different reality will show up shortly. So looked into it a little bit, and there's a number in there called the shelter cost or rent or owner's equivalent rent, OER, as it's referred to, OER. It's kind of an imputed rent for a homeowner. Well, this is a large component of the CPI, housing cost. And that data, the OER data, is actually lagged by, I'm not sure, it's somewhere between 12 and 18 months. So a year and a half ago, rents were dropping. Today, we know rents are increasing. But in the CPI, the calculation for the inflation number that will come out this week, we know that that number includes the OER from 18 months ago. So it will show that rents are dropping, and it will show that rents are dropping for the next several months. Plus, there's the fudge factors, which I can't even begin to try to estimate how the BLS comes up with some of those numbers.
Hang on. You said fudge, and I saw this. The fudge. I'm sorry. I'm tired. You know it's past my bedtime.
That's all right.
I'll stop.
The result is that the CPI, for example, food, CPI shows that food costs have increased 20%, 22% over the past 3 years. I think most of us intuitively know that that's bullshit. The Wall Street Journal even took a basket of goods, just like a common grocery basket, and looked at the 21 prices versus the prices as of a month ago, and the actual they itemized all of them, and I've got that list if you want it. The actual increase was closer to 42 or 45%. I forget exactly. And I think most of us in our own personal shopping experience would say, yeah, that sounds a lot closer to the truth. So my point is that CPI has all these adjustments, black box adjustments. They're not real clear on exactly how they compute all the numbers. And they use what they call heuristic regressions. They don't detail them. So it's kind of a black box calculation, but it comes in consistently lower than what most people think their actual inflation rate would be. So I wouldn't be shocked if CPI came in much lower this week for this past month than what the reality was. So that will make it easier for the Fed to start cutting rates. The real problem is going to be magnified because in a year we still have actually high inflation, and the Fed's cutting rates, stopping QT, that reduction of the balance sheet that I talked about. It appears liquidity is rising in the markets. All of these things which contribute to inflation being higher still. So what we're basically doing is making a trade-off, trying to offer the appearance that things are getting better while compounding the problem down the road. Doesn't matter who the president is. I wouldn't be surprised to see, say, for example, if Trump wins, to see inflation go back up to 6, 7, 8% next year. Would not shock me at all. So that's why I go over some of these numbers and some of the insights that we have in terms of how they're calculated, because people look at that CPI and they'll just say, oh, inflation's whipped. It's done. The Fed can cut. with no real understanding of what that implies for 12 or 18 months from now.
Okay, guys,
Hopefully, you have a little better understanding.
I'm gonna exit stage left because I'm exhausted. I'm sorry. You know, it's like 30 minutes past my bedtime. You continue on, do your thing.
Well, wait.
I love
wait a
y'all to
minute,
pieces. Wait. What?
because I'm going to get to your favorite topic right now. Argentina. Millie.
Malay.
Malay.
Yeah, you do that. I'm tired. I'm exhausted.
All
Good
right.
night, Brentwood. Good night, Melissa. Good night, Jane. Good night, Sky. Good night, Cheerful. Good night, Carson. Good night, all the people. Good night, Beatrice. Good night, James. Am I missing anyone that
There's
has
probably
actually?
a few on here that haven't entered the chat.
Well,
So
whoever I missed, good night, sweet dreams. God bless. And y'all continue on with Clay and mwah. How about that?
well, I tell you what, it is getting a little bit past our time. So I may save this for just Tuesday night. And we will talk about Malay then and Argentina. You know, we talked about how I encourage you to follow geopolitical events. He's obviously doing some huge things in Argentina. Some of the results have been interesting. Will they continue? Yet to be determined. But a lot of people in the economic world and the political world are starting to pay close attention, because if it works, it's going to put huge pressure on them to justify what they've been doing. So we'll go into this in a little bit more detail, give you a chance to ask some questions, maybe do some background work on it if you want to. And the dogs are getting a little antsy. So I'll go take care of them as well. I want to thank you all for being with us tonight. Really appreciate your company, your fellowship, your encouragement. Hope y'all have a great rest of the weekend. And we'll look forward to seeing you Tuesday night, same time, same place. Bring your questions, bring your comments. If there's something you want me to address or us to address, please do.
Wait, happy Mother's Day to all of
Happy
you.
Mother's Day to all of you mothers. Happy Mother's Day to all of you fathers that help your mothers. It is something truly to celebrate. So want to just wish you all a good night. Our time is up. We thank you for yours. Blessings to you. Thank you for joining us.